Hello and welcome back to the channel. A couple of weeks ago, I realized that I had just passed the milestone of 50 options trades so far in 2023 and thought it would be interesting to break down some details about these trades, which stocks they're in, and what takeaways I have so far. So let's start with the top line numbers. Out of 50 trades, 47 of them, or 94%, turned out to be winners. And these 47 trades brought in a total of $5,446 in realized profits. One of the trades got assigned, which means I had to buy 100 shares of the underlying stock. This represents 2% of the overall number of trades, which I found to be pretty close to my average rate of getting assigned going back to 2018. That leaves 2 trades that are still open, which I hope to have wrapped up with profits by the end of May or maybe June. Coincidentally, all 3 of these trades are in the same underlying stock. Stay tuned to find out what stock that is. So moving on to how these profits are stacking up over time. As you can see, in just 4 months in 2023, I've already made more than all of 2020 and more than half of 2021. Yes, I put in more capital over the years, but it certainly isn't double what the capital was in 2020. 2022 was a bit of an anomaly and also an amazing year for options with so much volatility in the market. I'm not sure if this year's income will surpass last year's, but it'll be nice to come close. Okay, let's talk takeaways. Takeaway number 1, you don't need to track hundreds of stocks. These 50 trades so far in 2023 only came from a total of 19 underlyings, consisting of 15 individual stocks and 4 ETFs. That's it. In fact, I found that the more focused my watch list is, the better my portfolio does, because it only requires me to be familiar and comfortable with a small-ish number of stocks. But the question is, how do I decide which stocks deserve a spot on the watch list? That brings me to takeaway number 2. I personally stick to quality stocks and ETFs. And to me, quality means blue chip, dividend-paying stocks. So I really like owning stocks that people use in their everyday lives. I mean, when was the last time you used an Apple product, or had McDonald's for a meal, or hopped into a Walgreens to pick something up? I'm betting it wasn't that long ago. I know it's probably not as sexy compared to selling options in Tesla, or Google, or Meta, or other meme stocks, but I'm in it for long-term profitability, as well as sustainability, and this system has worked well for me. There is one exception on this list, and that's Amazon. Amazon has been way off its highs since 2022, and I've decided that I don't mind owning stock at a certain price, which makes it a prime candidate for selling put options. Of course, if Amazon never gets close to my strike, which it hasn't all year, then I'm happy to use the profits, in this case more than $500, and use that to reduce my cost basis in the stock if I were to ever get assigned. Takeaway number 3 is that you do need enough stocks to be able to diversify your positions. Shifting the attention to another stock in the portfolio, Johnson & Johnson, this is a stock that all my open positions are in. J&J has brought me 0 profits all year, and in fact, I got assigned 100 shares at $165. So why isn't it a problem? Well, it's because it's just 1 stock out of the 19 that I've traded, and 3 trades out of the total of 50. No one's going to have a 100% win rate, but 94% comes pretty close. And the truth is, if these trades don't work out and I am forced to pick up more shares of J&J, that's not going to be something that keeps me up at night, because going back to point number 2, I picked high quality stocks to begin with. Especially if what's going on in the banking sector, I think it's a timely reminder not to put all your eggs in one basket. My final takeaway is to have a plan and to be consistent. I've been using the same system since 2018 and haven't had a losing month since. Part of that is down to having a system that's easy to understand, but also knowing how to stick to the plan and manage through difficult periods of volatility. In September 2022, I started trading one of my portfolios publicly, and these have been the results. As you can see, the numbers may fluctuate from month to month, but there's a lot of consistency in the trades, which means profits are being made every month, which are also reinvested right back into the portfolio to make more money as time goes on. And of course, if you want to follow along, you can sign up for my free newsletter that goes out every Sunday. I share real trade updates from my real portfolio, so you can always see what I'm up to. Click on the link in the description to find out more. I hope you enjoyed this video update. Please let me know what other content you'd like to see in the comments below. Until next time, take care and trade safely.